At the core, fund advisory is about bringing the right solution to our clients at the right time, making sure they're comfortable with those investments and that they perform well for our clients. After university, I studied international relations, and most people who do that want to go into diplomacy, as did I. So I worked for the Swiss Foreign Office for a number of years before moving into the private sector. Coming to Julius Baer really expanded the scope of my responsibilities and the scope of what I was, allowed to do in a sense. So I always say that at Julius Baer, I get to have a hand on the wheel. My work today with clients is oftentimes translating the complexities of international politics and economics into investable solutions. And doing that, I find highly satisfactory. The main tip for selecting the right fund is to work with the right financial intermediary. And I say this lightly, but I mean it quite seriously, because the quality of selecting funds differs from banks to banks. And it's really important you work with someone who has a seasoned team, who knows the different strategies, who has a relationship in the market to know what the good managers are and has access to that data. Because the bank can help you cover all of the important aspects of making sure you invested in the right funds. One of the things that comes up quite frequently with clients is this decision between investing in single stocks or funds, mostly because there is a perception that single stocks or companies of those stocks are tangible, and we know what happens with those. And I think that's a little bit untrue. I think most of us don't know the intricacies of multinational companies. Unexpected things do happen. So it is worthwhile considering having a diversified exposure, whether that is in equity funds on the traditional side or indeed also on the alternative side, where we recommend usually a multitude of strategies. Alternative investments are really important parts of the portfolio, and in fact they are becoming more and more important, particularly the private markets. The reason is that private markets are growing exponentially. So by only investing in public markets, clients often are missing out on a very large and growing part of the economy. So the roles of alternative investments in portfolios is varied, and we have very specific tools to cater to clients' portfolios in order to grow it over time. For us, it's very important to be proactive, meaning proactively go to the relationship manager and to the client before they come to us. I think that's the first hurdle if they have to come to us when they spot an issue in the portfolio. So we make sure we provide a high degree of transparency, because that gives our investors comfort that we are on the ball, that we're speaking to our managers, and that we are comfortable and continue to be comfortable with an investment, even if we do see things be a bit wobbly in the market. So it's really an interplay between making sure clients are aware of the ongoings in a fund, but also ensuring that we are making the right decisions around investments for clients. I think the next generation will invest very differently from the way we invest, in part because they have much easier access. They will trade through their phones and watches and so on. Who knows what the future holds. I think that because of the wealth of information they have access to, including due to artificial intelligence, also means that they will make decisions differently from how we might have taken decisions or do take decisions today.